The miners have been really challenging, really disappointing. Are they going to have their day in the sun? What do you see coming for the miners?
Yeah, so Gary, absolutely. Like, so for our perspective, for the same reasons, I just wouldn't, for the same reasons you're never don't have a position in gold is the same reason you don't have a position. You should never not have a position in gold equities, right? In silver equities, and because when that snap happens, it's real and it's powerful.
And we literally just went through this period of time, this last 5 to 10 years, where problem solving and the quality of thinking and being able to think through everything you're being fed. Yeah. You're being told and fed and directed and programmed in a certain direction. And to be able to think critically through all of that, it seemed like we were at our lowest point that we've been in generations. The schools are not teaching critical thinking through and problem solving through these types of things. It's get in line, do this, do that, do it this way, or you're out. And when the way you just positioned the future of AI, which is coming so quickly, how are those people who are not programmed to critically think going to come in and critically think all of a sudden?
100%. Like it's like we're Gary, you know what we're having? We're going to have a critical thinking crisis, which effectively comes on. AI is going to bring a critical thinking crisis. And like, that's not something you snap your fingers. Like that just needs to be trained from a young age and really brought this is not.
So that's going to take a generation. That'll take a generation to get through. But in the meantime, it wasn't the intent of this discussion. I didn't have it in my notes to go in this direction, but it seems to me like UBI is going to be a real thing, which is going to bloat government beyond anything Doge can cut.
Totally.
And so then, what happens to the purchasing power of the dollar in that situation?
Yeah. So you know what? Gary, a good friend of mine on Twitter. I'll try to dig up the tweet, but he always comes up with big ideas, like really abstract. And he got me thinking about what's the future? And he just kind of postulated out there. He's like, the future is firms that are 3 to 4 people, that are driven by AI. So like 3, 4 people driving the entire firm. Previously, maybe they had a few hundred. So 3, 4 people totally driven by AI. And here's the catch. They're not living in America. They're living in some tax-free jurisdiction.
The Cayman Islands.
So if they were anchored in America, they would be taxed, and that money would be given to this person that's on UBI. In the new world, you've got your AIs working. You're like, I know how this story is going to end. I'm just going to put my company over here. I've got, and so. The dystopian side of me, I just like, you're right. Like, to be totally frank, you can get look at the revenue per employee for NVIDIA. Like that's the story it's in itself. Like now multiply that across every industry. And then you're looking at a scenario where that you're going to have these companies are like, well, I'm not going to be a sitting duck and just wait to get taxed. I'll just move, and then you'll just get it's what it reminds me of, Gary. So when we're kind of seeing this in Florida right now, where basically the condo fees
yes, I know exactly what
you don't want to be the last person owning that condo. You're like it's just that upside down thing, and like that example, the condo example is almost. It's a great example because it can be scaled up infinitely to any country. Yeah.
All right. So I love this, and I could talk about this topic, for an hour. Let's swing over to gold here for a second. Yeah. So, all right. So Thomas, in the past 50 years, gold mining companies have exhausted most accessible gold deposits. So mining gold is more challenging today due to the increasing depth of deposits and the lack of capex and so many other reasons. So with the growing global demand for gold as a trade settlement currency and an inflation hedge and a protector against purchasing power loss, in your opinion, is the stage set for a significant price increase similar to the 70s or the early 2000s?
I think so. Yeah. So I think, like, I personally think this is where Bitcoin really does help, right? Like, I think you'll see these assets move in tandem. I think tortoise and the hare, in the sense that, like, they'll end up, I still think Bitcoin's such an early stage asset, so it will go up higher. But there are people across the entire risk spectrum that everyone's like, well, everyone wants Bitcoin returns. I'm like, no, not everyone. If you're a retiree, you want the gold trajectory. You don't want drawdowns.
You don't want the volatility.
Yeah, you don't want the volatility. So people get confused. Like, well, I was joking around. I'm like, oh, they always get the me too. Oh, well, this guy got 1,000%. Why not me? I'm like, well, listen, man, 30% every year is pretty damn good. Like, you just like, you kind of have to, just put your head in the game, right? But I think gold's going to have an incredible run. Bitcoin is going to help. Lift it up from a retail perspective. But I think bigger than that, you're going to get governments, which we've clearly seen. So that kind of, and the thing about gold in general, right? It's like people have a hard time understanding how parabolic moves happen, right? And the problem with the parabolic move is the first 30%, you're like, I'll wait for a 10% pullback, then the next 30. And so you're just caught short. You're caught short. This is why commodity investing, like, it truly is the thrill of making sure you don't get your face ripped off, right? Because it's like, as much as, like, for me, I'll never be naked gold, because I know that you can get that absolute coil off, and silver obviously is the corollary. But I think, now Bitcoin fits in that too. And but I think you can apply it across the whole commodity spectrum, right? People need to be long things, right? So in a way that, if you think about what AI, like, in a lot of ways, NVIDIA is a commodity. The chip is actually a commodity that no one else can produce, that you want to be long things that are scarce, and that have significant value. Now, obviously, they can keep producing new lines. Gold, that's going to be harder to do. And so, I definitely want to be long those assets.
So you mentioned silver. It's crossed some very important thresholds this year, between $26 and $33. It has an all-time high of 50. Everybody understands the rising deficit over the last 4 to 5 years, the lack of increase of supply, the increasing need for silver for AI data centers, EVs, solar panels, the electrification of everything. And really the rising up of over 1 billion people globally into the consumer class over just the next 3 years. All of this requires a massive amount of silver. We just recently saw heard Russia announce that they were adding it to their sovereign wealth fund. That's the first time in decades that anybody has announced that. We aren't even talking about the military applications that require silver. We're seeing bombs, hypersonic missiles being dropped. Anyway, demand is here to stay. That's clear. However, supply is relatively flat. What does your analysis show for silver moving forward?
Yeah, so silver is what gold doesn't have is actually the strong industrial uses that you've laid out, right? And that kind of, you have that duality for silver that just when we look at battery metals, I'm like, this thing shouldn't be actually kind of a precious metal. Like, it straddles this battery metal, electric metal, and a precious metal. So I hate to use a cliche, but you do kind of get two shots on goal with silver. Now, mind you, there's a volatility profile that's different with it, but definitely attractive in it. One thing that you said that caught me, your silver is, along with copper, these are things you need for developing economies to enter the developed world. Did you know this? And I still remember this data point that I saw. I'm like, this is incredible. Someone was like, oh, everyone's worried about AI eating all the energy. Do you know what? Do you know what's a bigger slug over the next 5 years that will eat more energy than AI? Air conditioning in India.
Yeah.
And people don't think about it like in the sense that the world is getting hotter, that these places, India, Africa, anywhere, in the equatorial region, around the world where it's hot already, that those places, just even from a survival perspective, Gary, they are going to need all the things that go into that box.
And I think they have something like currently 1.7 billion people in India right now. And it's more than 80% of them do not have air conditioning.
Totally. Which if you think about, as long as you continue, these are simple trades where I think the simplest trades are one okay, well, that country is going to do, of course they are. You can't just get rich and, and just sweat bucket.
They want the same basic positive things, to have a vehicle to be able to drive around instead of on a moped or nothing. They want air conditioning. And all those things that we have that we take for granted in the Western world, they don't have it. Those people are going to be raised up over the coming 3-4 years, and they're going to be now acquiring that. That requires a ton of natural resources.
A ton. And the demand is going to be significant because we're entering that world where you are going to see these countries say, listen, I've seen what it's done for China, and why not for me, right? There's that great meme, right? They got that pastor looking at it. God, Lord, I've seen what you've done for, why not me? But truly,
it is true,
because you're just listen, what China's done, and the real story has been Korea. Korea has literally silently, no one's even thought it. They've not only, created a juggernaut in tech, in manufacturing, and also in culture. No one would have said 30 years ago that in Asia, Korea, driven by K-pop and all the rest, would be the central force in Asian popular culture. And they have and that kind of, and all of that is really driven by what capitalism brings. It's it's the greatest thing ever.
So with all of this need laid out for silver and gold, and with all of the floor because of the demand that's under both, and because of the stagnant supply for both and the lack of capex driven into both, the miners have been really challenging, really disappointing. Are they going to have their day in the sun? What do you see coming for the miners?
Yeah, so Gary, absolutely. So for our perspective, for the same reasons, I just wouldn't, for the same reasons you're never don't have a position in gold, is the same reason you don't have a position. You should never not have a position in gold equities, right? In silver equities, and because when that snap happens, it's real and it's powerful. And I put out a tweet that I really feel nails what they need to do, right? There's two things, right? There's two ways you get out of this funk. And for the most part, the thing you're producing is hitting all-time highs, and you're barely scraping by. You're down 20%. That's kind of the world that how does this happen, right? That comes not from a place of fundamentals. If the thing under your ground that you have and lots of, and that's hitting all-time highs, I can get maybe you're underperforming because maybe the market's not figuring it out. But to be down or flat or there's just no way around it, right? And so two things, right? Point one, these large cap miners have a problem, and this is why we don't own them. I do wish, in hindsight, in the growth fund we owned Agnico, but it wouldn't have fit the mandate. But very happy for those that did. But I'll focus on Newmont and Barrick, for example. These stocks haven't gone up, even though the thing they produce goes up. They just can't produce enough of the metal. Their costs are rising. There are issues here, right? And the bottom line is all of that comes out in the cash flow statement, right? If the thing you're producing is worth a lot of money and it has grown significantly, and you can't grow cash flow in tandem, you're in trouble. So the market for that world is going to say, well, I need to see cash flow inflection. And in fact, that's what everything wants. The market wants to see cash flow inflection for these gold equity miners, right? Cash flow inflection is everything. So that's the first way you figure it out, right? And so I'll remind myself to give you a great example, because I think this summarizes commodities in a nutshell. So that's one. You got to increase your cash flow. Part two is then the other way you fix it is like, wait a minute, this guy has this under the ground. Well, someone smart's going to say, I'm going to buy that thing, right? And so I think two ways that this fixes itself. I would love because we own junior and mid cap, it's not going to come from the cash flow necessarily. In a couple cases it will, but for others, it's like, I want people to revalue what's in the ground there. So that I think is a huge opportunity where, those things can just happen overnight, right?
So you foresee, I don't want to put words in your mouth, you foresee an M&A cycle coming.
Well, I think that's one of the ways it resolves. I hope it's sooner than later, for my own book. But I that is definitely one of the ways it resolves. Or you inflect your cash flow. So now let's talk about that cash flow, because they're all invariably linked, right? I'm not going to go buy you as a miner if you can't actually do cash flow. So this is all linked as an industry as a whole. But then here's the real punchline, and I'll use oil and gas as a great example. XLE, which is the largest ETF for oil and gas names in America, like this is like your total oil, oil and gas producers. In the last year, this is 10 years, last decade, XLE is the total return is 62%. That's not fantastic, but it's 62% still. But if you were just to look at the price, it's up 9%. So over the decade. So you're like, what's happened here? Well, the difference, so let's call it let's call it 50%. 50% of the return from oil and gas stocks out of the total 60 came from dividends. Like, how crazy is that? So when you really peel it all over, you're like, wait a minute. Okay, so if you took dividends away, these guys would be up only 9% over a decade, but add them back in. But what it really shows you is that in commodities, dividends matter. They matter a lot.
The shareholders want a piece of the pie.
A piece of the pie. But if you take that a step back, well, what are dividends a proxy for? They're a proxy for cash flow, right? So it all comes back to cash flow.
Okay. Stay on this XLE for a second. The energy ETF XLE, it's breaking higher. XOP is following suit. What are some of the rock star areas that we should be focusing on in those areas?
Natural gas all the way. Natural gas. It's
tell us.
Yeah, so one name we like, Range Resources. It's like, so the great thing about natural gas names are they're cheap. They're making money here with a two handle in gas. Like, these guys are made for the depression, right? Like, and so I think the natural gas by country mile. And here's the way I will say this, right? That kind of coming back to that analog of like, well, the rest of the world wants clean air. It's a very simple thing. Like, why not for me, right? Like, I think that one of the greatest trades is just really around that. It's just that we stop burning wood for a reason. We're going to stop burning coal for the same reason. I know a lot of coal guys don't want to hear it, but it's true.
China's not stopping burning coal.
Yeah, so they're still growing, but they're importing natural gas significantly. They still value economic growth significantly. They're not going to put a halt to it, but the end game has to be getting off coal to natural gas and then ultimately to nuclear. But that's your chain of command here. And I think that once you kind of let's be frank, there will never be a new lignite plant ever in Europe. And even in America, it'll struggle to put a new coal coal plant when gas is this plentiful and this cheap. And it's not that it's like, that's just a fact of reality. You take this to any community and say, I can put you in a gas plant or I can put you in a coal plant. They will all nix the coal anytime.
So you talk about gas and nuclear. Ultimately, the G7 is professing big time nuclear. The United States is saying they're going to triple nuclear power by 2050, but it does take quite a while to go through the permitting process, to build out a plant, et cetera. So, right now we've got this insatiable demand for electricity to power supercomputers, for artificial intelligence, and all the other electrification needs. It seems like there's an incompatibility between the power needs of AI and everything else that's needed there and the existing electric grids. And then you have the timeframes for build out. So, how do you see this playing out in terms of meeting the grid needs?
Yeah. So, it really is exactly before we've always had a ticking issue, right? But with AI, everything's just been pulled forward and you're like, I need to fix this right away. So you've seen tech companies go out and buy nuclear plants. They're like, we're not going to wait. We're just going to go buy these things. But still, they still have time to wait. The fastest thing you can do to bring power on is natural gas. It's so we think that right now you can't even get the turbines. Like basically these guys are sold out. So I just think like if I've ever seen a layup trade, I've said I like gold equities, and I'm just I own them just because I don't know when that inflection happens. Well, what if I told you for natural gas the inflection's here and this thing's still trading at like $3.20? Like it's just like landed LNG in Asia is like $20. Right. So and Europe's 10. Like those are like, and Europe's 10 and it's cheap.
So you foresee, okay, the grids are going to migrate to natural gas to meet the immediate needs. How do you see the transition to nuclear taking place?
It's going to just take longer, but it's going to come, right? And again, like before I'd say that it under the traditional setup like X Doge, right? If you start to view the world through a Doge lens or through like call it an Elon Musk lens, because that really is what it is. It's like, why not? Like, why does Twitter have this many people? Let me cut it by 80% and see what happens. I think if you get visionaries that like Trump and Elon and these guys, like if we see a sped up process on everything, like man, things could happen so quick that we've never seen before.
Okay, so Thomas, when it comes to uranium, falling production, which we've seen from Kazatomprom cutting their production estimates, Cameco saying we're not restarting over here until we see prices higher, Paladin cutting a couple of weeks ago. Falling production should be good for prices, which then should be good for increased industry profits, right? So should the uranium play, since it's going to be a longer out, but it's pretty clear it's happening with not just the government backing, but the big tech backing, and everybody's now backing it, everybody globally. Yeah. Should the uranium play be a buy and hold for multiple years, like a set it and forget it? We don't know when this inflection is going to happen, but it's going to happen. So because it's going to take time to develop, but when it does, it's going to be explosive. It's going to be long lasting. So just tuck it away.
Yeah, so I think you definitely have a position on, and I think there's two levels that are happening at the same time. You've got you've got the longer term that's coming on, but then you got like the near term in Russia. Like the market is short pounds, and so I think you really do have two catalysts here that really work. But I think you highlighted a key issue, and this is why we're big believers in stock picking over buying these ETFs like URA, et cetera, because they're so overweight these large cap stocks that are not going to grow. Okay, yeah, they're going to get the price bump, but like, they're not going to be the ones that are meeting capacity, like, bringing on production to backfill what Paladin lost. Like, you kind of got to think a little bit, but I think that therein lies the opportunity. And I think, there's something that's come through in the market that has been a feature in commodities is like, oh, just own the commodity because all the producers just like, we don't want to mess with operations. You don't want all that risk. So I think there comes a time where too many people are invested in the uranium pounds and not enough people are invested in the production.
Interesting. Okay. Well, hey, this has been a fantastic conversation. You and I, we could just keep talking and talking. Before we wrap up here, and I asked Thomas our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and every single expert interview, just like this one that we conduct. They're all up there. When you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, If You Don't Own Gold, You Know Neither History nor Economics. This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Thomas as much as I have. Please let him know. Hit that like and subscribe button and leave a comment below the video. All right, it's now time for the Golden Nuggets segment. Thomas, I've been asking this question lately of my guests. I want to discuss this future scenario, okay? Picture a dinner party, Christmas 2029. It's got two tables. One table's really happy, really happy for what they invested in right now, 2024, going into 2025. It has helped to give them financial freedom. And the other table, well, they're really sad, okay, because of what they invested in right now in 2024, 2025, because it did not help them. In fact, it's hurt them. What do these two tables represent to you in terms of the asset classes?
Yeah, so it's a kind of, we own both. It's so definitively the one table's the tech table, right? You've been and if you've been long Nvidia, you've been very happy, right? I think it's been a great trade. Are you
still happy in 2029?
Oh hell yeah. I think you'll be very happy in 2029. The gold table, I would say you're going to be very happy in 2029. But I would say that that both those tables would really benefit having one chair at the other, if you know what I mean, right? Just
a little diversification.
Little diversification in the sense that I'm not sure, you'll be happy in both scenarios, and there's definitely a scenario where either could be up maybe a factor more than the other, but I still think you're better off there than owning some random industrial that's going to get their lunch.
Will you be happy? Will you be at the happy table, with, say, some copper, some uranium, some oil, some nat gas, all the things we discussed? And, at the sad table, would you be sad if you had long dated treasuries?
Oh yeah, sorry, yeah, okay, yeah, absolutely. Sorry, I just want to I make sure I understood the full question. Yeah, of course, yeah. So owning treasuries, and I would say the U.S. dollar is a unique one. But if you're owning any peripheral currencies, you're going to get blown out.
Okay, so for all the things we've discussed over the last hour, you would want to have your toe in the ponds of nat gas, of oil, of gold and silver and copper and uranium and tech.
Correct.
And Bitcoin. Those are all the toes you want to dip, all the ponds you want to have a toe dipped in. But then on the other side, the peripheral currencies, the long dated treasuries, any of the fiat stuff you want to just stay away from.
Yeah, and also value traps, right? Equity value traps are another big issue where you're investing in companies that seemingly are cheap, but then keep getting cheaper.
Thomas, thank you for coming on to Metals and Miners, being so generous with your time, your analysis, and ideas. It's been a really fun hour to spend this time with you. Would you share with everybody any important message you want to leave with those tuning in, where they could learn more about your work and how they can connect with you?
Gary, it's been an absolute pleasure, and I look forward to doing it again. Yeah. So with respect to our research, my great colleagues, partners, Chris Wood and Scott Willis, we all publish on our Substack. You can find that it's Grizzle Research and Quant. That's research.grizzle.com. So that's where you can find us. And we do run an ETF, which is disruption at a reasonable price, which is basically everything sitting at that table. We own the tech and we own all those commodities. And the ticker is DARP. We just feel that the future will be very much about things that are tangible and real and in finite supply, and also about the technologies that are gonna change the way we view the world.
That's awesome. And so, guys, if you're not following, by the way, I will have all that information up on the screen. I'll put it in the description area with links so everybody can click through. Guys, if you're not following Thomas, you really need to. He shares some great information. Obviously, he's got a great sense of humor. He's somebody in the space you definitely want to be following. I've been doing so for quite some time. Thomas, I look forward to having you back on sometime soon. Thanks for being here with us. Everybody else, thanks for watching. I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview, just like this one that we conduct. They're all up there. When you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History nor Economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.